Usually we start, discussing with how the trends are shaping up on the manufacturing and services. But the much more interesting and much more relevant chart is on your right hand side, which is Bloomberg weighted economic policy uncertainty index and trade policy uncertainty index. So the trade policy uncertainty index is in the orange line, and the economic policy uncertainty index is the blue line. And as we can see, and the data going all the way till 2009, these indices are at its highest levels we have seen historically. The reason is one of the key, election planks of the new administration in the US, apart from tighter immigration and apart from deregulation, was tariffs. Tariffs on most of US trading partners to ensure that the US trade deficit gets controlled and, in fact, uh, reduces all the way close to zero. Of course, at that point of time, many market participants thought that probably the hard line is a negotiating tactic, and once the administration takes over, there will be some tariffs, but probably it will be towards sensitive sectors, and overall business will go on as usual. And in fact, US may benefit from stronger political stability, as well as deregulation, and hence, for the first 2 months of this calendar year, we saw the term coined as US exceptionalism, which largely meant that US economy will continue to grow exceptionally compared to rest of the world, driven by stability and overall deregulation, which will help drive business growth. In fact, the last month, as the U.S. president announced various tariffs, getting into the reciprocal tariffs this month as well. The U.S. exceptionalism has turned on its head. In fact, now the exceptionalism is happening in reverse, where the US dollar, US bond yields, as well as US equity markets are falling much more compared to rest of the world due to the policy and economic uncertainty. One of the again key aspects, what's really driving this uncertainty is that there is total lack of clarity on how the tariffs, which the US president announced on 2nd April, how they will be implemented, and what will be the timelines, and what will be the final shape and contours of that. So, given that these amount of uncertainties exist, it of course leads to slowdown in business and spending. And whenever there is a slowdown in business spending, there is typically a slowdown in business hiring as well. And as we see slowdown in business hiring, one of the key impacts of that is lower wage growth, lower job growth, and hence lower consumption growth as well. And that is what it is likely to really dominate for the next 2 3 months till we get clarity on the next trade policies for the US. So apart from the uncertainty due to trade policy, we are also seeing increasing trade fragmentation, where the Eurozone, the US, and Asia Pacific are talking of setting up own supply chains. For example, Germany passed a very aggressive fiscal expansion plan last month, where they want to set up their own defense capabilities. What it really means for this for the rest of the world is, whenever, compared to a world which was very well integrated and globalized, now you have a much more fractured world. What it means is broken supply chains, higher inflation, higher inefficiency, and that broadly, it raises your cost of production, and consequently it raises your cost of consumption as well. So what we are looking at a world is where growth is slowing down, as well as potential inflation is likely to pick up. Uh, Having said that, we do expect global growth to slow down from probably 3.5% range to 1.5 to 2% range this calendar year, largely driven by European fiscal expansion. Like I mentioned, Germany, France, and the major economies in Eurozone are planning to expand on the defense production, are planning to expand on the key technology areas. And that's where we do expect some growth to pick up, at least in the near term. We also expect China to continue its monetary and fiscal stimulus to counter, U.S. trade restriction on Chinese exports to the US. So China will probably come up with more stimulus, and that may drive Chinese near-term growth. I would say more strongly, and that's I would say would be the large two key drivers of global growth.
Mutual fund investments are subject to market risks. Read all scheme-related documents carefully.